it's okay, we're going to go to Wayne first. He's our mortgage specialist here, and he sponsors this event and the in person room as well. So over to you, Wayne, if you want to give us an
Thank you
update, and then we'll go
very,
back
very
to
much.
Jason, and yeah,
Perfect.
so he can have a
Yeah,
cup of
no,
tea or a quick drink whilst he's yeah,
sounds good to me. I'm sharing my screen. Is it
yeah,
there?
it's all
Okay.
good.
Fantastic. Perfect. Yeah, really looking forward to watching Jason. But guys, for those of you that don't know who I am, my name's Wayne. I run DMI Finance. Small-time investor, big-time broker, I would suggest. We've been going for 23 years. Um, I was mentioning Santa's last event last week. We were working out how many mortgages we'd done, and um, we've only had this new system for the last 10 years, but I worked out we've done well over 20,000 mortgages completions since that point in time, and well over £1 billion in lending. So, we know a little thing about mortgage finance, guys. We specialize in assisting investors and virtually solely investors. Of course, people have residential mortgages and we do service that, but our main client focus is property investors, guys. Um, in terms of a mortgage market update, where do we start? Well, I guess can't start without talking about inflation, guys. I'm just moving the. There we go. Uh, is my screen? Sorry, guys, is my screen gone?
No, we can see your market update.
There we go. I couldn't see it. There we go. Apologies, guys. Um, so we can't start without talking about inflation. Sat here last month and I mentioned that inflation had dropped back. It was at 3% for the 12 months till January. It dropped back last month to 2.8%, lower than predictions. Predictions last month were 2.9. It dropped back to 2.8. This morning, we saw that inflation had dropped back from 2.8 to 2.6%, largely due to fuel costs. And lower than expectations, which were coming in at 2.7%. Guys, I would suggest it is a momentary thing, though. Forecasts are still that we will reach within, the next few months, truthfully told, 3.5%, probably not getting or probably not falling back or starting to fall back until the end of this year, all things being relative, coming back in towards that 2% government target in 2027. This is all things being relative, guys. What happens today will change that. What happens tomorrow will change it. But that's today's forecast. A case in point, guys, the US tariffs. You go back a month and a half ago, 2 months ago, expectations weren't there that we would see what we've seen. In the last few weeks, we've seen Trump come in and say mandatory 10% minimum tariff for the whole of the world. With China's being a ridiculously high amount, then they said, okay, well, actually, we'll give everybody a 10% tariff now for the next 90 days, bar China, which they're in this kind of tit for tat with the US, as you guys have seen it. I think now we're at 145 tariff, 145% tariff on imposed on China from the US, and with China imposing 125% on the US, and it's kind of who'll blink first. It's a bit crazy. What does that do to mortgages and UK stability? Well, I guess it's no great surprise that in order to keep the UK economy stimulated, the government, or the Bank of England rather, the Monetary Policy Committee at the Bank of England will be looking to consider reducing the Bank of England base rate to create that stimulation. Forecasts were already that the MPC meeting in May would facilitate a base rate reduction of 0.25%. The expectations are even greater now with the US tariff aspect. So forecasts are pretty strong that we will see a 0.25% rate reduction in the Bank of England base rate on the 8th of May when they next meet. What does that do for mortgage pricing, guys? Has it had any real impact? Truth be told, no. Mortgage pricing still remains quite competitive. Rates are coming down. When I say competitive, guys, I'm well aware that everything's relative. What's competitive today may not be competitive to 2020 standards, but we are where we are. Truth be told, they are coming down. Swap rates, the underlying rates at which banks secure fixed rate pricing, guys, again, falling back slightly, easing, allowing for lenders to offer more competitive fixed rate pricing. If the fixed rates that they can secure drop, then they can, of course, pass it on to you and me, the consumer. If you look at the swap rates at the top here, guys, there it is a month ago when we last met. I think we met on the 19th of March. Then I've got it's the 15th today, 16th today, so a couple of days ago, and then again this time last year in the last column there. So you can see swap rates even month on month. There are 1.5% reductions from where we were a month ago. What does that do? Well, it stimulates the ability for lenders to reduce their interest rates. We can see Land Bay. I was at an event for Sunderland and Sittingbourne last week, and I mentioned that Land Bay had reduced their rates by a fifth time in 2025. And I thought that was pretty significant. They've gone one further. They've now reduced their rates for a sixth time this year by a further 0.1% reduction. So, if all of those reductions are 0.1, which some might be higher, some might be lower, you're talking about a 0.6% reduction from where their rates were in December. Pretty significant. Our core mortgages have reduced their residential rates by 0.25%, buy-to-let rates by 0.1%. That's happening tomorrow. Vida Home Loans have reduced rates by 0.14 last Friday. Foundation Home Loans reduced select products by up to 0.3 today. The mortgage works tomorrow by 0.25%. The list goes on, guys. There's lots and lots of rate reductions happening in the market at the moment. In terms of criteria movement, I always say criteria movement doesn't really change if the margin that the lenders can offer and reduce their rates, then that's what they do first, because that's something they can up and down at very quickly judge the business volumes and tweak the rates accordingly. Criteria, you see far fewer criteria changes because lenders become typecast. They won't lend on that, or they will lend on this, and the expectation is if they introduce something, they're introducing something for the mainstay. And that's what we've seen more recently with Paragon re-entering the 80% loan to value space last Friday. Pretty strong move, hot on the heels of MT Finance that increased their maximum loan to value very recently to 80% for buy-to-lets, and the mortgage lender being owned by Shawbrook. CHL mortgages having advanced their adverse credit criteria, quite good. For people with minor credit blemishes. Hot on the heels of Fleet, who did the exact same criteria change last month. So I think it's CCJs and defaults within the last 3 years. If it's £500 and satisfied, they'll accept it. If it's up to £250 and unsatisfied, they'll accept it. CHL also coming into the HMO space for first-time landlords, pretty significant, up to 6 beds. Not the only lender in the space, lots of lenders in that space, but it's good to see another entrant. It's a needs must. Lots of clients now will be wanting to get into HMOs even on their first buy-to-let acquisition. We've seen Quantum Mortgages enter the bridging finance space, really good move. Not the most attractive products, but they are allowing dual rep solicitors. So that's not commonplace with most bridging lenders, where one solicitor can act for both you and the bridging lender. Quite rare. And they'll allow automated valuations. Not on all properties. Pretty stringent criteria to meet, but it's a good move. And if it just pushes other lenders' criteria or forces other lenders to change their criteria too, it's really good. Big change for second homeowners. If you have a secondary or occasional use property that's yours and you reside there, your holiday home, bear in mind that I think it's something like 132 councils very recently implemented 100% premium on second homes. So it's effectively doubling the council tax on second homes in 132 local authorities, something like 552,000 houses or properties to be affected by that. Whether you own any second homes, guys, I don't know, but it's important to note if you do. Key dates for your diary then, guys. Bank of England MPC, the Monetary Policy Committee, are meeting on the 8th of May. As I said, widely expected a 0.25% reduction. And the next Office of National Statistics data for inflation will be released on the 21st of May, which, as I say, is expected to taper back up. In terms of headline rates for today then, guys, there they are. Those in the kind of greeny blue have gone down since we last met at the virtual or the online event last month. Those in black remain the same. Those in red have gone up slightly. So if you look, vast majority of the rates are in, or it's kind of half and half for black or green there. Most of the 5 years have gone down since we last met. As I always say, guys, smoke and mirrors with lenders. A gift to you in one hand, a takeaway in another. Whilst these rates look ultimately incredibly attractive, as Jason's just said a few moments ago, the most keenly priced rates come with the least keenly priced arrangement fees. So it's a bit of a false economy in many instances to take the best rate because you're paying somewhere. You know, a good broker will patch you up or match you up with the most attractive rate and the most attractive product overall. Guys, that's it from me. I don't know if I've got any time for questions, but there are my contact details if anyone wants to get in touch with me or the team at DMI. We publish a free weekly newsletter that goes out every Tuesday. If anyone wants access to it, then please do hit the QR code there or send me an email on either of those emails and one of the team will register you for them. Thank you very much.
Thanks, Wayne. Appreciate that. Yes, we do have time. So if anybody's got any questions for Wayne on a finance, and if it's a question regarding leases and finance, you're in the right place this evening. So any questions that anybody's got finances, or are you looking for anything?
Yeah, because if you've got a thing that I'm quite interested about that. I mean, this is something further down the road for me. But if you've got your own residential property, you inherit a property, you keep your residential but rent out the inherited property, is that still classed as a second home?
No, because it's rented.
Right, okay.
Yeah.
Okay.
So rented property is not an issue. You know, it's just a traditional buy-to-let. Well, no issue with that.
Yeah, even if it's unencumbered.
Even if it's unencumbered, it's an investment property. You didn't acquire it. So from a buy-to-let perspective, it might be classed as a consumer buy-to-let, but that's a regulatory aspect. It shouldn't make any difference to your council tax.
Terrific. Thanks a lot.
Yeah.
Yeah. So Paul, it's that situation where I have a property in London because I live there, and I have a property in Kent because I'm here half the time. So that's a second home because I'm in between two places.
So you're literally paying double the tax on one of those, are you?
Yeah.
Yeah.
Yeah. We're I mean,
That's a bummer.
we're trying to, yes, we're trying to look for, you know, like everything else. Why should that be the case? Because, yeah, but that's the definition, I suppose. That's the definition of a second home rather than a buy-to-let. You can have loads of buy-to-let. So yeah.
But just a quick one on bridging finance. Have you got products that go from bridge straight to buy to let, or do you have to set up?
You do. No, you do, but I think it's ultimately a bit of a false economy, Paul, with many lenders, and I'll tell you for why. It's the fact that the benefit is that you get a buy-to-let mortgage offer and a bridging offer on day one. So you're thinking, oh, great, I've got the cast iron guarantee that I've got the buy-to-let on the back end here. And there's going to be nothing that goes wrong to get that. That's true, largely speaking. The problem that you have is that the valuer is tasked to provide the current value and the afterworks value today before you've done the work. So he's going out and he's saying, right, Paul's buying a property for 140 grand. He's spending, and you have to provide your schedule of works and costings. So you provide your schedule of works. Yep, he's buying it for 140. It's going to be worth, I don't know, 100, he's spending 20 grand on it. Okay, now you think buying it for 140, spending 20 grand on it, you're not looking for it to be worth an end value of 160 because you don't spend 20 grand to make 20 grand. Your anticipation is it's going to be worth somewhat more. The problem is the valuer is tasked at giving an end value today before you've done the work. And he doesn't know that your brother's a chippy and you've got the kitchen from your mate down the road, secondhand, but at an immaculate condition at half the price. So he's basing everything on his imagination, and therefore the problem is that the end valuation that he provides on that property, in my experience, is not as beneficial or favourable as going to a standalone valuer once the works are done. Okay. Does that make sense?
Yeah, I appreciate it. Thank you.
Yeah. So yes, the product's there, mate, but I think largely speaking, it's a bit of a false economy. Not added to that too, lenders like Precise, for example, they offer a bridge to let, but their buy to let products on the bridge to let are less favorable than the buy to lets that they would allow you to get if you had a standalone bridge from somebody else and then went to them for the buy to let. It's a bit of a false economy.
Great information. Great question there, Paul. Thank you. Great information in terms
Thank you
of,
very much.
it all looks good on paper, but you've got to look at the real detail of it. And yeah, thank you, Wayne. Appreciate it. I'm sure there'll be other questions this evening. So if it's okay, we'll carry on and come back to you in a bit. So it gives me great pleasure this evening to invite Jason to speak to us, because I met Jason on Clubhouse. I've listened to him many a time on Clubhouse and various things that he's spoken about. We interviewed him on Clubhouse, and the information he's going to give you is absolutely fantastic. So please get your pens and pads ready, so that I can pass over to Jason. Thank you, Jason, for coming along this evening at short notice. It's just I'm disorganized in many ways, and I don't plan anything well in advance. So that's my excuse. But I do appreciate you sort of saying, yeah, look, I'm ready to present whenever you want. So thank you. Over to you. You've already got the screen sorted out and that, so you've clearly done this before. Just need to unmute yourself. Unmute. Thank you.
Yeah.
It was going so well. No. No, we're going to have a lot of fun. So yeah, take lots of notes. If you've got any questions for Jason, for Wayne, or for any of us, just put it in the chat and we'll pick them up. But yeah, we'll go through the whole presentation and cover questions at the end. Thank you.
Thanks for the invite from Sunil. So my name is Jason Patterson, aka the Short Lease King, because I like to buy flats with short leases. This is my Instagram details there, Jason Patterson 365. So if you do want to take any screenshots or tag me when you can, then I'll just obviously put you on my stories later. Yeah. So started off my property career while I was in Sainsbury's. I was in Sainsbury's for 11 years. And while I was there, I managed to buy 5 properties while I was in Sainsbury's. And then that overlapped with my teaching career. At the college, I was teaching A-level maths, GCSE maths and below. But while I was in Sainsbury's, that's when I managed to start to buy flats. And I bought 5 of them while I was there. My first ever flat that I bought was in 2001. And my first ever lease extension was in 2002. This was a voluntary lease extension. And then I started off with buying vanilla buy-to-lets, visual flats, then refurbs, reconfigurations like 1 bed to 2 bed, 2 bed to 3 beds. Now I buy a lot of short leases and buying freeholds to blocks as well. And my portfolio is in London and in Dubai. I've got 20 plus podcasts available with Apple, YouTube, Spotify. It's all there to have a look at. Done 20 plus face-to-face speaking engagements, and I've been in the 2 property magazine, like YPM magazine and Blue Bricks magazine as well recently. So you can look them up as well. So it all started with me buying flats. Now, with flats, at the time, when I was in Sainsbury's on my wages, couldn't afford to buy the houses. So I just thought, you know what, if I'm going to start with property, I'm going to start buying flats. Then back then, because I started in 2001, Homes Under the Hammer started in 2003. Yeah, so I started pre-Homes Under the Hammer. So and pre-Sarah Beanie with Property Ladder. So there wasn't many people around, but this guy was around, Andreas Paniotu. And at the time, he managed to buy over 8,000 flats in total. Yeah, so imagine having 8,000 flats and you're making £600 each per month. That's 4.8 million coming in every single month just from flats alone. Yeah. So I was thinking, this guy is great. I'm going to continue to buy flats. So the philosophy is lots of littles make a lot. Because he managed to buy a place down the Bishop's Avenue in London, N2, all the billionaires row they call it. Bought himself a private jet, got a yacht. So I'm thinking, right, I'm following his path, just buying flat after flat after flat. He's still around now, but a lot of them he sold and he moved into hotels. But yeah, that's where I got my flat strategy from, basically. So the philosophy is lots of littles make a lot, because it all mounts up over a period of time. This was my first ever flat that I bought, 2001. I put in the offer in 2001, 4th of June. And then I completed in September. I bought the top floor, 1-bedroom flat, conversion, so flat conversions I like to buy, but I don't mind buying purpose built as well. So this one I bought for 70,000, and the lease was about 82, 83 years back then. So someone said to me, "Oh, don't let the lease fall below 80 years." So I was thinking, what are you talking about? What's 80 years? So 80 years is the marriage value. So if your flat falls below 80 years, this is when your flat starts to diminish in value. So that 80-year mark is important. So what I did the following year, I phoned up the freeholder and I asked him for a lease extension. So he asked me what I do. I told him that I work in Sainsbury's. He's like, "Oh, you work at head office?" I said, "No." "Like, you're a manager?" I said, "No." "Supervisor?" I said, "No." "So what do you do?" I said, "Oh, I stack bread. Yeah, I put that the Hovis, Kingsmill, Mr. Kipling pies. This is what I do." So he's like, "Really?" So yeah, that's what I do. So I think he felt sorry for me. So he gave me the lease extension for £1,000. Yeah, so I extended the lease to 125 years. Ground rent was £25 and increases by £25 every 25 years. So the 9th of December 2002, that was my first ever lease extension, and it was a voluntary lease extension. And then from then, I just started to learn because I didn't know what I was doing. So what is a short lease flat? So basically anything under 80 years are classed as a short lease flat. This is where the marriage value kicks in. And the marriage value is the difference between the value of the property with a good lease compared to it being extended. So basically it's uplift in value, what they call the marriage value. And this is the definition from an MP of what the marriage value is.
Has not, until this debate, received the attention I believe it warrants and very much needs. It concerns marriage values, referred to by the Lord Truscott, the Earl Lytton, and in detail by Lord Howard. Marriage value, for those who are unfamiliar with this term, is defined as the increase in the property's value once a lease below 80 years is extended or enfranchised. Existing legislation requires the financial benefit or additional value created when extending or enfranchising a lease. As not.
Basically, the concept is you buy a flat with a low lease, you extend the lease, and that creates an uplift in value because the paper version of the BRR, basically. Now, this here is another MP talking about my strategy in Parliament. He was a former surveyor who was turned into an MP. I just turn the volume up a little bit. Turn it back. Back over here. All right.
Christmas present of all time. And make no mistake, smart investors recognizing this forthcoming windfall are already buying residential short and medium-term leases precisely for this purpose. Having cheaply extended the lease, they will immediately reoffer the flat for sale with vacant possession and enjoy the big lottery win.
So it's big discussions in Parliament talking about short leases, but notice he said smart investors. So I was like, yeah, of course. I had to say smart investors.
Christmas.
So the general concept is top 3 elements of what you need to get right: the purchase price, the lease extension cost, and the end value of the flat. These 3 are important in order for you to make a decent profit. Then the refurb and the reconfiguration costs, these ones are bonuses. You have add-ons, but the top 3 are the ones that are essential, and the bottom 2 are bonuses. So if you can find a flat with a short lease, reconfigure it from a studio to 1-bed, 1-bed to a 2-bed, or 2-bed to a 3-bed, and you can refurb it, then these ones are called a triple threat. And triple threat makes you the most money moving forward. So now, what are the basic steps in relation to extending a lease? So either you or the solicitor or the vendor will contact the freeholder asking for a lease extension quote. Yeah. Now, once that comes back, you can negotiate the price with the freeholder, because not all of them try and fleece you or inflate the price. Some of them do, some of them don't. But you contact them, they give you a quote back. If you're happy with it, you can move forward. If you're not happy with it, you can negotiate via a lease extension surveyor, or part of your legal team can do that on your behalf if you want to. Then you agree a premium with the freeholder. And once you agree a premium, your legal team will send these documents off the land registry to be registered. Yeah. So you contact the freeholder, get a price, you can negotiate, get the price accepted. And after that, the legal team will sort out the paperwork within about 6 to 8 weeks. And after that, off the land registry to be registered in the long queue. Now, the costs that are related to lease extensions, you got to pay for your own legals. You got to pay for the freeholder's legals as it still stands. And you got to pay for the lease extension surveyor as well, if they don't give you a desktop valuation. So these three, you got to pay for out of your own pocket. And depending on what area you're buying in, I say put aside a minimum of about 4.5K to pay for this if you're outside zone 1 and zone 2 of London. Now, there's two main routes that you can use to extend your lease. There's a voluntary route, which I like to use, and there's a Section 42 route, which is the formal route to extend your lease. Now, this one was from last year. This was a flat in Wood Green that didn't sell at Auction House London, N22. It was just left there. Had a short lease on it, so no one obviously bought it. So I contacted the freeholder. I said to them, look, I'm interested in buying this flat. There's no Section 42 notice on it. Can you give me an idea of how much it costs to extend the lease? So the freeholder wrote back to me via email and said, hi, it's going to cost you 70,000 to extend your lease, additional 90 years with peppercorn ground rent, which means 0 ground rent. Our fees are 1,100. And then if you include the surveying fees as well, it's going to come up to about 2 grandish. Yep, so about £2,000 for a surveyor and their legals. And then my legals probably cost about a grandish as well, grand and a half. So in total would have been about 4.5 grand roughly for the legal side of it. Yeah. So even though you don't own the property, you can always contact the freeholder, and then some of them will respond to you with a quote like this, and some of them won't respond to you. But a majority of them will respond to you and give you a rough idea of how much it costs to extend the lease. The lease, you can bake that into your figures on your spreadsheet to see if a deal stacks up or does not stack up. Now, a Section 42 route is the formal way of extending your lease by 90 years with peppercorn ground rent, which means 0 ground rent. Yeah. Before, you must have owned the flat for at least 2 years before you apply for a Section 42 notice. But Matthew Pennycook, who is the housing minister, abolished this rule in January 2025. So you can buy a flat or a house with a short lease or with a normal lease, and you can extend the lease straight away after purchase. There's no need for you to wait 2 years of ownership for you to extend the lease. You can do it from day one now. So if you see a property at auction, you might see things like this, where it says the Section 42 notice to extend the lease will be served prior to completion, and then the rights will be assigned over to an incoming buyer. This one had a 71-year lease on it. So the vendor served the Section 42, which is the seller. And then when you complete and get the keys, the Section 42 notice is assigned over to yourself. And then you finish it off within 6 to 8 weeks, hopefully, after you get in the keys. Now, some lenders like this to be in place before they give you the finance on a bridge or a mortgage. Yeah, so that's why sometimes it's good for the vendor to serve it, just so the lender can see how much roughly the cost will be, and then that's assigned over to yourself, and then you finish the process off. Again, at the bottom, this one was another auction property, conversion flat, 51 years left on the lease. And at the bottom, you can see a Section 40 notice to extend the lease will be served on the freeholder, and the rights will be assigned over to the incoming buyer. So again, you can buy it, the flat, either cash, with bridging, potentially with a mortgage, It's 51 years, so it's touch and go. And then when you get the keys, you can finish it off. The lease extension within 6 to 8 weeks, so long as there's no issues like absent freeholder, for example. Now, the ways that you can finance some of these deals, you can either get a mortgage, which I'm going to show you about in a minute, either a fixed rate with ERC charges, which is early repayment charges, variable rate. Some variables don't have any ERC charges, but some do. Or you can have a tracker, again, ERC charges. You can use a bridge. There's two main routes for the bridges. The first one is where you get a bridging finance loan, and the lender will want you to complete on the Section 42 notice or lease extension before the end of the bridge. And the second type of bridge is where the lender wants you to serve a Section 40 notice in between exchange and completion. And there's another type of product called a hybrid product, where the lender will pay for the property, they'll pay for the lease extension, and then you put down between 25 and 35% deposit. Yeah, so that's a hybrid product. You can also use crowdfunding, like Rupert and them guys, and you've got raw cash, or you can do a JV or get a loan from someone as well. And then obviously use that money to buy your property. Now, some of the popular lenders are here. I'm going through some more in a minute, but these are some of the popular lenders that do short leases. In general, this will vary from day to day, month to month, year to year, but a lot of the lenders will say to you, the lease cannot be lower than 50 years at the end of the mortgage term. Yeah, so the lease can't be lower than 50 years at the end of the mortgage term, but it will vary from lender to lender. So the popular ones, TML, which is the mortgage lender, got Kensington, got bought by Barclays Bank last year, got Lambay, FHL, which is Foundation Home Loans, Capital Home Loans, which is CHL, Kent Reliance, TMW, go down to 70 years, got Fleet Mortgages, you've got Precise do bridge to lets as well. So if you want to get a bridging loan and change over to a buy-to-let mortgage, you can. Paragon, HSBC, West One go down to 45 years. I met with them about 2-3 weeks ago down in Mayfair, the head of bridging. SBI, which is Bank of India, Keystone go down, and Together as well. Now, most of these lenders will lend on flats above 30 square meters, yeah? Together and West One will go lend on flats below 30 square meters. So if you've got a studio flat with a short lease or just a studio flat, you can go to either West One or Together for sure, and they will lend on that particular flat as well. Now here, so a lot of the time, or some of the time, you might see on Rightmove where it says cash buyers only. Well, the agent might say to you, you can't get a mortgage on this because it's a short lease. It's not always true. Yeah. So some of the lenders you can lend, like Clydesdale, they go down to 30 years and they'll give you a 5-year mortgage. Capital Home Loans, CHL, 76 years. Darlington, 85 years, not too bad. Coventry, 70 years. Fleet Mortgages, 75 years. FHL, Foundation Home Loans, 50 years. And they'll give you a 5-year mortgage. And Foundation Home Loans got some products available up to 80% loan to value. So you put down a 20% deposit, which is not bad. And the arrangement fee at the moment, one I got was like 1%. So it's quite low. So I was happy with that one. You've got HTB. They go down to 50 years and they'll give you a 2-year mortgage. You've got Harpenden, 40 years, and they'll give you a 1-year mortgage. Yeah, 1-year mortgage. You've got HSBC. They go down to 35 years on the lease. Interbay, 53 years. Kensington, 70 years. Kent Reliance, I like them, they're quite good. 55 years. Keystone, 50 years. The list just goes on and on. MHBS, go down to 50 years, give you a 5-year mortgage. Lambester on there as well. You got Precise, 70 years. Quantum, down to 37 years, and they'll give you a 2-year mortgage. Saffron, 60 years, and they'll give you a 5-year minimum. Santander, go down to 30 years, with a 5-year mortgage. Shawbrook, 55 years, give you a 3-year mortgage. So there's a lot of lenders that will lend on a short lease flat, depending on what it is. This list will obviously vary day to day, month to month, year to year, because lenders add products, remove products, add products, remove products. But this was a snapshot. The mortgage lender, TML, 50 years. Swansea, 50 years. So the list just goes on and on. This is just a snapshot. On the course, I go through all of them. that I do on a short lease call. This is just a snapshot of it. Now, this one, I completed on last year. Yeah, last year. I bought a flat, I extended the lease, and after that, I refinanced. So this one was just under $500,000, 75% loan to value. And the lender added their fees on top, gave me a 21-year mortgage. Now, once you refinance, sometimes you can't always take out your full amount. You got to look at the stress test, rental cover calculations, and all of that. But your broker will be able to help with that as well. And the lender will also check as well. Yeah. So the aim is to extend the lease and or do your refurb and or do your reconfiguration, get it valued 6 months later. Yeah. The valuer comes back round, etc. And then if they're happy with it, they'll revalue the product and they'll release the funds up to 75% loan to value, but they're going to add their fees on top. Now I'm tied in for 5 years with this lender, but I don't want to leave. So, but you can always take out money going forward, which I'm going to show you in a minute. 21 grand, 18 grand, you got for the early repayment charges, ERC charges. But make sure as part of your mortgage product that you choose, you got this function here called additional secured borrowing. Yeah, called additional secured borrowing. So it said you can apply for additional secured borrowing 6 months after completion of your mortgage. Yeah, so this is either in section 7 or section 9 of your mortgage offer. So if you got a flat, short lease, you got a mortgage on it, you add value by extending the lease, doing a refurb, whatever it may be. After 6 months, you stay with the same lender, you go back to them and you can extract the cash after 6 months under this function called additional secured borrowing. Sometimes it's called a further advance, depending on what lender you're with. So if you're looking to recycle your cash, rinse and repeat, rinse and repeat, make sure that function or facility is part of your mortgage offer. Otherwise, you're tied in for 2 years or 5 years, then you got to wait to pull your cash out before you can go again. That's if you want to pull your cash out. Not everyone wants to pull their cash out. Sometimes they call it, like I said, a further advance. And the further advance may be available subject to market conditions at the time of your application. This one was with Paragon, but I had to wait six months in order to pull the cash out of this one. But again, the same thing, section 9 or section 7 of your product, where you can add value, extend the lease, and after that, after 6 months, you pull your cash out, rinse and repeat, rinse and repeat. This one, I'm going to show you this example. This was in a flat in North London, top of North London, 155, 64-year lease. Now, I don't go above 3 floors, so ground 1, 2, 3. Because it helps with the service charges, builders insurance, and that kind of thing, and the profit. Yep, so this one here, bought for 155, 64-year lease. Now the builder done it as a flip project. So he bought it, done it up to a decent spec. I didn't need to do any work to it. All it had was a short lease. So put nice doors in, nice handles, put underfloor heating in the bathroom. Nice doors, like I said, USB sockets in the wall, new tub, new towels, new sink, new cooker, new washing machine, new everything. Yeah, it was nice in there, like really nice. But the agent phoned me up and said, Jay, basically the builder phoned up the freeholder asking for a lease extension quote. This came back, voluntary method. He said, I'm not paying this. So either I didn't have the cash to pay it or he didn't want to pay it. The agent contacted me, one of the ones that I've been buying from for like now 17, 18 years, and said, yeah, Jay, we got a short lease for you. You're gonna like this one. So went up there, new instruction, said, yeah, I'll buy it. This one was sold to me before it hit Rightmove and Zoopla, off market. Now the lease extension was 15K, but an additional 90 years. Normally, I go for peppercorn ground rent, but this ground rent was 250, so it wasn't too bad. Normally, I said I go for 0 ground rent. The costs, their legals were 1,150 plus VAT, so it wasn't too bad. It was standard. The stamp duty is coming up on the next page. So the 155 to purchase it, 15K is for release extension. Their legals, including VAT, with 1,300. Because I was happy with that price, I didn't want to negotiate because I've got some in the same block already. It's 780 for the for my legals. Survey 800, so 173-ish. End value 225. The uplift was about 51k-ish without doing any work, just a simple lease extension. So to purchase it, 25% deposit. I got free survey as part of the mortgage deal. At the time, broker fee was 250. At the time, which has changed now, stamp was 5250. Illegals to buy it 15. So all in to buy it, just to purchase it was 45k-ish. And the legal side of it for the lease extension plus a premium was 18k. So all in overall, I put in 64k into the deal. Then my initial mortgage was 116. I put down 25% deposit. After 6 months, refinance with the same lender. So there's no ERC charges under the further advanced section. And I took out 52k. So basically I put in 64, took out 52. So I had about 11,000-ish left in the deal. So I took out about 81% of my money. So it's not too bad. That's why I didn't mind having the ground rent at like 250. So I left about 11 grand in the deal. So property's rented out, 450-ish. So after about 2 years or so, all of my cash would have been taken out in total. Another one, auction, 120,000 was as a guide, sold for 180. Again, 51-year lease. And it said, again, Section 42 notice to extend lease will be served prior to completion. Then the rights are signed over to an incoming buyer. The usual, Auction House, London. Just 4 in the block, 51-year lease. So all the info is there. EPC rating of a D, but by the time it was done up, it was a C. So all in good time for Ed Miliband's EPC rating of a C and above. Could have been converted to a 3-bed, but just left it as a 2-bed. Because kitchen was quite big with natural light coming in, so it could have been converted, but I just left it. So this was Section 42 was in the legal pack. The vendor put down 30k to extend the lease, but I knew that that wasn't going to be the case. It's a proposed offer, but it's not the actual offer what the freeholder would have agreed to, which you're going to see in a minute. This was a probate property because a person passed away and the executor, which was the person's daughter, took over and served a Section 42 notice. So if you're going to buy and flip a probate property, the stamp duty, some of it or all of it, you can claim back if you flip it. If you're going to keep it, it's a different story. You still got to pay for it. End value of this same flat was 325 because only 4 in the block. One sold less than 6 months earlier for 325. So bought it for 180, 40k to extend the lease in the end with a freeholder, 30k to refurb it, 5k for legals, auction house fees, 1,008 if you include VAT. Stamp at the time was 6k. So it's 262 all in. End value was 325. So you make a profit of about 62k-ish, roughly. So it's not too bad just for a simple deal. If you do 2-3 of them a year, 120 grand, 180 grand, and you're not doing much work really. So this another one here. Again, it's a variation to the short lease flat strategy. Buy a flat with a garden, land, and parking spaces. So what I've done with this one, I bought a flat with a short lease. Then I bought a freehold to the block as well. Then I extended my own lease to 999 because I'm the freeholder now. Refurbished the unit, rented it out, and then the land on the side has turned into a building plot. So that's the flat here. That's the garden space, and then there's parking spaces around here. So all of that I own because I bought a freehold to it. That's the garden space. So I spoke to some of my developer friends, and they reckon best case scenario I can get a pair of semis on here. Or worst case scenario, I can get 1-story, 2 separate 1-story properties, maybe 2 or 3 bedroom flats, with quite a big space for the garden. This is the house here, or the flat here, should I say, that I bought. 72-year lease, bought the freehold, and after that, obviously comes with parking spaces and a big garden that's been rented out now for a while. The parking space is right here, so people started fly tipping. So the council were on to me. So I've got to do something with the land basically. But yeah, it's a bonus. So you can buy a flat with a short lease, with a big garden and or parking space. I mean, it could be a potential building plot as well. Yeah. So again, on that space on the right hand side, spoke to my developer friends and they said, yeah, you can probably put a couple of semis on there as well, or maybe one pair of semis, should I say. So add value and the land comes for free basically. To put a new fence up the other day. Yeah, that's the other plot on the right hand side. Then another one that I done, bought a flat with a short lease and it come with a parking space at the back. So I cleared the land, cemented it and put garages on it. Yeah. So that's another thing that you can do going forward. So again, I bought the flat with a short lease. The flat's behind. I bought a freehold to it as well, so rented out, so that's fine. But people kept on fly tipping at the back where the parking spaces were. So cleared the space, because the council wanted me again, fenced it off, concrete it up or cemented it up, and then just put some garages on there and just rent the garages out. Yeah, so I got some other income coming in from that one. The rental, capital appreciation, uplift in value from a lease extension, bought a freehold, and then I put garages on the back and get some rental income from the garages at the same time as well. So you might as well just try and sweat the asset. So it's not a bad size. All right, now last part, the Leasehold Reform Act kicked in on the 24th of May 2024. As you heard earlier, there's no need to wait 2 years to extend your lease. You can extend it straight away once you buy the flat. Now, Michael Gove put this through and the marriage value through before he swiftly resigned and the Conservative lost anyway. So what he put through was the lease extensions to be 990 instead of 90 years when you extend your lease by the Section 42 route. This, as you're going to see in a minute, is still in court. It's up for debate if it will go through or not. They want to abolish the marriage value, which makes it almost up to 50% cheaper to extend your lease. But that will depend on the deferment rate and the capitalization rate as well. Again, that's in the courts at the moment. What's pushed through again is the right to manage your block. So if you live in a block of flats or rental flats and the management company are not doing their job properly, you can take over the management of the block, the running of your block, if you want to, under the right to manage. This came in March 2025. Matthew Pennycook, the housing minister, pushed this through. So if you're not happy with your actual block management company, then you can take over the block of your flats if you want to. And the big one is banning the sale of all new leasehold houses and flats, many flats in this case. Yeah, so in 3 to 4 years' time, there'll be no more leasehold flats. Yeah, that's in 3 to 4 years' time. So that's going to come through to fruition as well. But the marriage value and the 990, yeah, which are important to short leases, are being fought in court at the moment. So in January was the first hearing at the High Court. A lot of the fat cats went to court and they took the government to court, yeah, to stop the 990 from being pushed through and abolishing the marriage value. Now, it's not millionaires going to court, it was the billionaires that have gone to court. Yeah. You got the Cadogan estate, the third richest family in the UK. You got the Grosvenor estate. So you got the Crown, got the Grosvenor estate, in the Cadogan estate, the third richest family, the billionaire family, taking government to court. Long Harbour, government to court. Annington Homes, until recently, to the government to court. All because they want to block some of these new leasehold reform acts from coming in. Yeah, so it's serious when billionaires are involved. Yeah, and Cadogan's own like a lot of Chelsea and Knightsbridge. They own like half of central London, these guys. But a big billionaire family, Long Harbour, who have 4 billion worth of assets, again taking the government to court to stop some of these leasehold reform act rules from coming through. But what will happen is, and then Guy Hands as well, at the time of this, he had over 40,000 units, as in properties. He sold some of them back to the government now, based on this. But again, he was one of the original ones taking the government to court to stop the 990 and the abolishment of the marriage value. because it will halve the value of their assets. Yeah. So that's why they don't want these rules to go through. But the 2-year rule has gone through, and the other ones is 50-50 if they will go through or not. But it could take up to 3, 4, 5 years for this section of the leasehold reform act to go through court, especially when billionaires are fighting it. They're like almost got unlimited cash. So if anyone's interested in doing any short lease courses, mentoring, deal analysis, please let me know and we can be in touch. So, end of the presentation.
Jason, thank you very much. Amazing presentation, lots of detail.
Yeah.
I think, there was a lot of financial information, broker information, and legal stuff. So you've covered every angle, and I'm sure Wayne was sort of quite, looking closely at all the information about the mortgages and the brokers, etc. There's a lot of detail that you presented in a very short amount of time. So yeah, not but very short amount of time, and that wasn't a joke there about small short leases. So, but no, amazing what you managed to do. Look, we have got time for questions if Jason's okay with that. So if you've got any questions on the leases, then please put your hand up like Paul has, and let's go straight to Paul.
Cheers, Jason. That's very informative. Thanks very much. It's not something I'm personally involved in, but yeah, very interested in it. In fact, I'm a freeholder in 2 blocks of flats. So I'm interested about the Section 42 notice. If you serve a Section 42 notice to a freeholder, are they legally obliged to accept that 42 notice and come to a arrangement of a price?
Yeah. So by law, it was before, like I said before, you need to have owned the flat for at least 2 years before you can serve it. But now there's no time frame. So if you own the flat and you serve a Section 42 notice, then the freeholder is obliged to give you 90 years with peppercorn ground rent. They cannot say no. So by law, they have to give you that 90 years on top of what it is at the moment with peppercorn ground rent.
Okay.
By law, yeah.
That clears that question up. So how do you, if you can't agree between yourselves, that's when the surveyor comes in, does it? And how do they get to their value for that lease extension?
Yeah, so basically there's all different variations to it. But if say you own the flat and you want to extend your own lease, you can serve a Section 42 notice via your solicitor. But before that, it's best to have a desktop valuation or a physical valuation from a lease extension surveyor. Yeah, they'll give you a figure. Say for example, they valued it at say 40,000 to extend the lease. But on your Section 42 form, you'll put down 30,000. Yeah, I mean that's enough to the freeholder and their legal team, and then they'll come back with a counter offer, and that's called a Section 45, and they'll probably come in with 45,000 or 50,000. Yeah, and then over time you should be able to meet them in the middle at what should be around the 40,000 mark. Yeah, and then after that you just put it through legals. Now, if for example their surveyor and your surveyor cannot agree on a price, then after 6 months, if you can't agree a figure, then you go to the tribunal, and then the tribunal will decide what you pay for your lease extension based on the surveyor's reports.
Okay.
That's the Section 42 route. If you're doing a voluntary route, like I like to do, as you saw probably in the presentation, there's no rules, no laws. You can extend your lease to 990, 999, like a virtual freehold, 150 years, 125 years, 99 years. I mean, there's no time scale. You could just go back and forth and negotiate with the freeholder. A reason why the voluntary method is because with some of these ones, like I said before, you can buy the freehold to them as well. So with a lot of these ones, like this one here at the back, I bought the flat and then I wrote to the freeholder afterwards asking for a lease extension. But I also put in, will you be willing to sell me the freehold? I mean, the freeholders come back and said, yeah, here's a quote for the lease extension and here's a quote for the freehold. So I bought the freehold because I think he must have bought the house originally and converted it into 2 separate flats. So that person made their money already and then they're passing it on to someone younger like myself. And then I just took it over. So That's why I like going the voluntary route rather than the Section 42 route.
Yes, thanks very much, Jason. Appreciate that.
You're welcome.
Yeah, great question. Very comprehensive answer. So thank you, Jason. Appreciate that. Thanks, Paul, for the question. Nebby, how are you?
I'm doing good. I'm doing good.
Good, good. I opened my TikTok today. The first person that came up was you today, so that was good.
Oh, that's
So
good. That's good.
yeah, great video as well, and congratulations on all your YouTube that you're doing and all your other social media. Yeah, please feel free to ask your question.
I appreciate it, Sunil. Thank you. And thank you, Jason, for the presentation as well. It was super informative. I've actually been following your journey for a few years. Before I even started investing in property, you was one of the first people I actually followed. So you've inspired me quite a lot. So I want to thank you for that, first of all. I guess my question is a little bit different. So clearly you've been very successful in what you've done with regards to short leases, right? You've been doing it for over 2 decades. If you had to attribute your success to one thing, what would that be?
I'll say consistency. And yeah, probably with one thing, just consistency. And the second thing, drowning out the naysayers. Because initially, people said to me, oh, especially the first one, why are you buying leasehold for? You don't own the land that it's on. You're about a freeholder. What if they try and fleece you? What if they give you this? What if that? I said, don't worry about that. As long as I'm making my money every month off that one flat and being consistent with it, then it worked out nicely. So same as you saw, as you probably seen already with the Sainsbury's one, do £500 to £600. You get another one that's £1,000, get another one 1.5, get another one 2 grand, and before you know it, you want 5 grand a month, 10 grand a month, 15 grand a month. Yeah, so it's double, triple, quadruple my wages. So I was thinking, lots of littles make a lot, so it's worth it. So forget about listening to other people. Yeah, just be consistent and stick to what you believe in, and also try and master one strategy first. Yeah, before you start moving into other things like developments or HMOs or commercial to resi. Yeah, so master that one strategy, and then when you master that, then you can start to diverse into other areas.
Sweet, I appreciate it. Thank you.
You're welcome.
Yeah, that'd be a great question. So thank you for that. And again, a great answer. I love your saying, by the way. A lot of littles make a lot. It's very much like Tesco's. Every little helps. But yeah, but you wanted to say, so yeah. No,
Yeah, this
brilliant.
is the one.
Can you tell me where did the how did you come by that quote? How did you put that quote together? I mean, it makes so much sense, but how did that come about?
But I was at work one day, well, and then I can't remember. I can't remember how many puppies I had, maybe like 18, 19. And then, but by that time, I'd quadrupled my wages. And then someone said to me, like, what are you still doing in work? What are you still working for? I said to myself, yeah, it's true. Like, what am I working for? And then someone just mentioned, got lots of littles there that you're making up. And then from then, it just turned into like a little slogan where lots of littles make a lot.
Yeah.
£500 there, £600 there.
Yeah.
It just adds up. I mean, this guy, Andreas Paniotu, is a prime testament to that as well.
Mm-hmm.
He just bought flat after flat after flat and converted flat after flat after flat. And then, like I said, 8,000 flats, £600 each, 4.8 million coming in every month.
Yeah.
It's amazing.
Yeah.
So,
no, it is amazing. And I think it's the fantastic sayings that you've put together there. And I suppose that's become your mantra as you go by, everything. Yeah, I rented out a parking space last week or a week before. It's £30. It's not a lot of money. It's £1 a day, okay? But when you look at it, I have got to do no work. I've got no thingy. They just go and park their car, and you think, yeah, there's no cost to come out of there. It just falls to the bottom line. But if you do that so often, I suppose it just creates. And even in a year, it's 365 quid, and in 10 years, you're looking over 3,600. And so the multiplier effect does kick in, doesn't it?
Yeah, exactly. Because you got different models, as you know already. You can go like high end with the models and get lump sums,
Yeah.
or you do like a pound stretcher where you sell everything for £1.
Yeah.
But it still turns into a multi-million-pound business.
Yeah.
So it depends on what route you want to go down, either the Waitrose route or the pound stretcher route. I just told you the pound stretcher route because I was limited in cash.
Yeah.
But yeah, everyone are different.
Yeah. I think my question is like following Nebi's question, it's a bit different in terms of um, you said very consistent, but you've got a strategy that's very unique and you've stuck to it. So because we've all done it, me included, we've gone from this buy to lets to HMOs to developments to land development and the whole spectrum. But you very much focused on one area and been very successful at it. How did you do that? Where did the belief of that come?
Yeah, I think initially, I evolved first of all the vanilla buy to lets, and because I didn't know any better, because I just thought let me just buy a property and then rent it out, try and get some passive income coming in. But I didn't know about too much about refurbs and reconfiguration on and short leases at all back then. I just thought buy it, rent it out. And then I met someone called AJ. So AJ, I met when I bought done my first hat trick, yeah, which was so I bought three properties at once. So I went in there into the estate agents and I said to him, "Oh, I'd like to buy three properties." And then he looked at me, looked at my spreadsheet, and then he said, "Yeah, like the figures stack." And then he showed me a little bit about the refurbs because he had a nice Mercedes outside, nice black Mercedes. I'm thinking, he said to me, "Jason, you know how I bought that car?" I said, "How?" "It was by doing a refurb." I said, "A refurb?" So, "Yeah, not for my wages, for my refurb." So he showed me that he refinanced, bought it, added the value, refinanced it, and he used that money to buy a new car. So I was like, whoa, that's amazing. So from then, I started to know about refurbs and reconfiguration. Because before that, no one told me nothing. Yeah. Everyone talked to me about FIFA and Championship Manager on Football Manager on the PC. That's all I knew. Yeah. And Street Fighter, Tekken. No one talked to me about property. And then further down the line, after the credit crunch, 2007 to 2009, 10-ish, I had about 8 properties with BM Solutions, which is Birmingham Midshires. Then they changed their lending criteria where you can only have 3 buy-to-lets, but I had about 8 with them. So they said to me, "Look, you can stay with us, but you can't take out any money. So no equity you can take out." And back then, rates started to drop down to 1%, 1.5%, like just super low. It's making a killing off the cash flow. So I said, you know what? I'm going to take move 4 from them over to TMW, which is the mortgage works. So I did that. 3 of them were fine. And the 4th one, the surveyor said to me, "Look, this one's got a short lease. They won't lend any money on this. What best thing to do is go and get the lease extended. Once you get it extended, go back to TMW, let them know that it's been extended, release the funds, then they'll then they'll release the funds." I was like, okay. So I've done that, extended the lease, went back to TMW, they released the funds. That was in 2009-ish. So I thought, you know what, this is a good idea. I'm gonna start buying flats with short leases. Yeah. So for the next 16 years or so, every flat that I bought had to have a short lease where I can add value as a minimum. Yeah. So then from then, and then that was the first time as well, actually, where I bought the freehold as well. Yeah. So I bought the freehold and extended my old lease to 999. So then it just evolved naturally since then.
So you're not ever looking for long leases
No, not now. No.
because
Has to
you
be
can add
short.
the value.
Yeah, it needs to add value
Yeah.
somehow.
No,
Otherwise, yeah.
you know what? You're
Mm.
so congruent with what you're saying because when I asked you that question, you smiled like big smile. No, no, we don't do that. I do this. I don't do anything else.
Yeah, yeah,
No,
yeah,
no, yeah.
yeah.
There's a lot of been lessons this evening in terms of short leases, but there's a lot of lessons around mindset as well. So hopefully, it'd be love to have another chat around the mindset, and because a lot of people were saying to you, Jason, no, there is a negativity about leases, isn't there? And you
Mm.
overcome that, and you're actually an ambassador to say, look, leases can be very good, and you can make a lot of money. So, yeah, we'll catch up with that soon. I'm going to go to the final question with Rick, if that's okay. Rick, good evening.
Evening, Sunil. Thanks, Jason. Great stuff, mate. Um, I've been an investor for a fair old while, but I've got a leasehold flat. Well, I've got a couple of leasehold flats, but I've generally more recently sort of steered away from for this reason. That historically extending leases has been perceived, rightly or wrongly, as a bit of a pain in the backside and what have you. So I've got one that I own as a buy to let at the moment that I'm looking to renew before too long. And I'd sort of put it on hold a little bit. So I'm slightly paying a bit more on the mortgage than I would like to be because of this uncertainty. And, this is the importance of going to events and bits and pieces. I hadn't heard the news flash of January 2025 that you didn't need to own new properties for 2 years anymore. So I was like, oh, great. Well, that opens up a few options. And that leads me to my question really is I've got one at the moment that I'm looking at. It's through one of the auction houses that you've mentioned this evening.
Okay.
It's got a short lease, a very short lease, like 30 years left on it. With something like that, from the list of lenders that do lend on them, is that going to be a cash purchase typically for something like that, and then get it done as soon as possible?
Yeah, you can use bridging for it. So one of the
Yeah,
bridging lenders will lend for sure
yeah,
on this one. But what my broker said, if for example, say for example, we went to HSBC or Santander, they're going down to 35 years,
yeah,
or Santander go down to 30 years on their mortgage, for example. If you are willing to purchase and extend the lease simultaneously,
yeah,
yeah, at the same time, and the freeholder agrees to it, then basically all of the market is open to you.
yeah.
Yeah. But if you want to purchase the flat and extend the lease later, then you're going to probably have to use a bridge or
Might have
cash.
to do that being under
Yeah.
auction conditions. They might insist that that comes later. It might not happen in the time. And that was kind of a question that I put in the chat. From
Mm.
your experience, Jason, from the notice being served on the Section 42 route to actually getting a lease sort of sorted out, what's the sort of time frame for listeners? We're talking weeks, months. What are you noticing at the moment?
Yeah, it will vary. So, for example, if the freeholder is not trying to inflate the price or anything, and you're
Yeah,
happy with it, like the one I showed you for 15K, for
yeah,
example, if you've done that route by the Section 42 and it's come back and you verified the quote with your surveyor and he said to you, yeah, that is not inflated, I'd accept the offer if I were you. So
yeah.
once you get the offer accepted, yeah, then you should be able to complete the lease extension within 6 to 8 weeks afterwards. Yeah, and then it's done. If the negotiation between the you and the freeholder can take 2 months, 3 months, 4 months, then
Yeah.
it's add on 2 months after that to complete. Yeah. So it depends how far away you are initially.
Okay,
So some
so
freeholders, yeah.
something like sort of two-ish months if it all goes well, something towards sort of four or so, 4 to 6 months if there's a bit of backwards and forwards, basically.
Yeah, basically, yeah.
Okay, cool.
Yeah.
That's one. Thank you very much. Appreciate it.
It's all right. Any other questions in there? Who is it? I see Wayne. Who else you see? I say Dan. Oh, Dan, what's this one? They'll be recording tonight. See, yep, they'll be recording. How do you find these properties? So basically, um, traditionally, it was via the agents. So I used to get them. Some agents have been buying from for the last 17, 18 years. A lot of the time, they send me a WhatsApp message when they get a new instruction 3 or 4 weeks before it hits the market. So I'm on their investors list. So if I want it, I can obviously go and see it. Like that one that I showed you was 1155. That was a new instruction, and that didn't hit the market because they messaged me 3, 4 weeks before. I went in there, viewed it, and then I bought it. So long-standing relationships with estate agents. Number one, auction properties, post or pre-auction are good. Yeah, the ones that don't sell, like the wood green one for 70,000 to extend the lease. And lately, like the one I'm buying now, was direct from a housing association. Yeah. So they know what I do, the local councils know what I do, and then they send me an email now and again to say, yep, the landlord is selling. Do you want to have first dibs at buying this property? So the one that I'm going through now, a landlord, like I said before, as we were speaking earlier, landlord leaving the country, and we left the country already actually, gone to Spain to live, and he's selling his portfolio. The housing association contacted me and said, we want to retain the rental client, the tenant. The housing waiting lists are long, like tens of years long. Do you want to buy the short lease flat? I said yes. Look, went to go and view it. I said yes, so I'm buying it now. Another route that I've been using is from eviction solicitors. Yeah. So those eviction lawyers, they go to court and may evict the tenants. Section 21, Section 8. Again, they give me the heads up. Like the one in Tottenham, for example, they had a bad experience with a tenant, and the tenant didn't really vet the place, but just didn't pay the rent. And then that eviction lawyer evicted the tenant, and then the landlord said, you know what? I want to sell the property, don't want it anymore. They contacted me and said, yeah, Jason, we got a property for you available. Landlord's selling. Do you want it? Yes or no? So that's another route. So the councils, eviction lawyers, housing associations, and mainly post or pre-auction and long-standing relationships with agents. So I hardly look on Rightmove like I must have before. It's only through indirect routes. What else is on here? The garage right now next to it. Representation. In banning all leasehold flats, who will have a final say over the freehold of the block? So according to Matthew Pennycook, this question says, in relation to banning all leasehold flats, who will have the final say over the freehold of a block? So basically, when they come in, if and when it comes in 3-4 years' time, under Matthew Pennycook, all new builds will come with no leases. Yeah, so no leases like in other countries abroad. So you buy it, and then the lessees will be managing the actual block. So they've got to sort out the gardening, the bin collection, any maintenance, any decorating. They've got to sort out all about the cleaning. But there's going to be still one overall freeholder. Now, that freeholder, they haven't decided who it's going to be, if it's going to be one big organization or one company. They haven't said. But from what I've seen abroad, where the flats have no leases, each of the individuals have a share of the freehold in that block. Yeah, so there won't be one overall lease as in freeholder. Each individual will own a freehold or share of the freehold. So that answers that question from Carl. What one was 80%? 80% was the Foundation Home Loans, FHL, for sure. They offer 80% loan to values. That's the one I got recently. So, and their arrangement fee isn't too bad actually as well.
Yeah.
Typical time frame to extend the lease. Yeah, so I think Rick answered that one already. So once you agree a premium with the freeholder, it's 6 to 8 weeks to complete. The longest part is the negotiation with yourself and the freeholder. So if they don't try and fleece you, you can accept the offer within the first week or two. And after that, 6 to 8 weeks, it's all done. Off land registry to be registered. Yeah, I think that's it.
Yeah, no, absolutely brilliant. Thank you for this evening.
Yeah, you're welcome.
Again, yeah, short notice, but you gave a presentation, fantastic presentation. There's loads of different areas that you covered. Like Nebby, I think I look at all that, but then I've learned so much from how focused you've been in one particular area, and that shows how if you're focused in one area, that you've got the mortgage information, you've got this information, all the changes, the legal stuff, and I think we've all been guilty of spreading ourselves thinly and trying to do 16 different strategies all in the same week. So I think there's a lot to be said for what you've done and how you've done it. And again, I love your saying, a lot of little a lot of little makes a lot.
Yeah, lots of little make a lot.
Yeah.
and I also like when people ask me about my goals, like what's your aim, what's your goals? But the main goal or aim was to create or is to create the freedom of time.
Yeah.
Yeah. So every time you're buying property or buying assets, you're buying yourself freedom. Yeah. So you don't need to work for those actual assets. You can work for fun,
Yeah.
but not out of necessity. So you create the freedom of time. So you can go and pick up your children from school, go on holiday every 90 days or less. Like, don't need to wake up early because I don't like waking up early. That's why I missed some of your 7:30 programs on Clubhouse. Yeah. Just have the freedom of time. You go to the gym in the daytime. No need to worry. Yeah.
Yeah.
Because this gives you the option of having the freedom. And in the past, when I was working, I had to reapply. Sometimes I had to reapply for my own job. I've been doing the job for 10 years and I had to reapply for my own job because of restructuring. And other times I've been put into the redundancy pool. And I'm thinking this is too much uncertainty. So property, i.e. in my case, short leases, gives you the financial security and stability. So I can just live my life. I can buy my car, I can buy my house, I can go on holiday with no need to worry. Work for fun. Yeah. So that gives me the security for myself and my family, along with the main thing, which is the freedom of time. That's what I've always wanted. So managed to achieve it.
Brilliant, and congratulations. And I think I'm glad that you asked that question, or you highlighted that question, because it just summarizes I mean, it's helped me this evening because we get so busy that we forget why we're doing certain things, or are we trying to create time? Are we trying to create money? Are we trying to create the next deal? So yeah, it's a great focus. Lots of learnings in this evening. So appreciate it. Yeah, let's get together again if you don't mind, because I think on the mindset side, there's a lot that you brought. Sort of the focus, one strategy, learn it really deep, and everything else. And it just shows the success that, if you do that, how successful you can be. But I think you've helped a lot of people, and I know you help a lot of people in our WhatsApp group and your WhatsApp groups and the other ones you contribute to. So thank you for serving everybody as much as you do. You're always there for us. So appreciate it. Yeah, and we'll catch up very soon. Okay, guys, thank you for this evening. And thank you, Jason. We'll catch up very soon.
Yeah. Everyone, enjoy the match tonight. Real Madrid versus Arsenal.
Yeah.
Come on. Yeah.
Thanks.